Hello and welcome to Dinis Guarda YouTube podcast show, powered once again by businessabc.net, citizenabc.com, and wisdom.ai. We keep profiling personalities that are changing the world of business and technology, and how we can actually create a better narrative, demystifying the biggest challenge we face today, both in business, in society, and in all of our lives, because everything is interconnected more and more. So one of the things we keep highlighting in our series is the importance of understanding the nuances of building companies, businesses, and especially the technology nuances. We are going through more and more a lot of transformations when it comes to digital, when it comes to artificial intelligence and multiple layers of business, e-commerce, payments, and all the areas of architecture, of financials and technology that we are going through. In this series, we always highlight the makers and the doers. And that's the case of my two guests for today. So welcome to our series, Tom Kiddle and Manthan Dave, co-founders of Palisade. And both of them have a fantastic experience. And the case of Tom Kiddle is a software engineer entrepreneur who has worked with key players including Ripple and XRPL Ledger, and has extensive experience in the areas of e-commerce, payments, and blockchain. He's the co-founder of Palisade, a French-regulated multi-chain digital asset custody platform backed by Ripple that provides business and a comprehensive solution for managing digital assets securely. Palisade Inc. provides support for the leading blockchains and DeFi protocols, including Avalanche, Ethereum, XRPL, Solana, Polygon, and more. It also supports wallets and payments apps, automated DEX and CEX trading platforms, and tokenization minting platforms. And Tom has served at global brands like Ripple, Apple, BT, National Films and Television School. About Manthan Dave is a software engineer and entrepreneur with over 10 years in experience in the areas of, as well, putting together all these areas of innovation solutions across blockchain and EVMs. Manthan is spearheading Palisade's mission to provide business with unparalleled solution for safeguarding their digital assets. And prior to this, Manthan was staff software engineer at Ripple, contributing to the development of cutting-edge systems such as on-demand liquidity payment, settlement, orchestration, and algorithm trade execution. And the bios are quite impressive and a lot of practical stuff. So welcome to our series. I'm excited to have you here, both of you.
Hey, Dinis, great to be here. Thank you.
Let's start by a bit of your background. So as people that have been in software in the areas of finance and blockchain and decentralized and as well, a lot of innovation on these areas. What brought you to this, and probably the first element of your education where you thought you would go and become a business leader or a technologist?
Yeah, sure. There's a lot to talk about there. So I really got into computing at the age of around 13, 14 when my dad brought the first family computer home and connected it to the internet. And I remember there was a lot of hype around this thing called the internet at the time. And we plugged it in, I think it was a 24K dial-up or something like that. And it was the biggest disappointment I've ever experienced at that age, at that time in my life. It was a white page with words on it. And I thought, this is crazy. Like, there's so much hype about this. And this is what we get. But really, I think that sort of piqued some curiosity in me. I started to sort of like dig deeper and try and understand what the internet was really about. And over the years after that, I learned about HTML and started to learn actually you could build websites. And with a website, you could communicate with people. And it was at that young age that really my fascination started. It started really with, understanding what the internet was, what a computer was, what an internet was, how you can use that to communicate messages and things like that, and then how you can build on top of that. Later, that developed into, this idea that you can actually build a business here. There's a way to write some code and solve a problem and build a business on top of that. And I think from a really young age, I was surrounded by people in my family who had been building businesses, all sorts of different businesses, not technology, businesses, building businesses, logistics businesses, all sorts of stuff. And so, I was quite interested from a young age, business and how you can solve problems. I think it just so happened that technology, became a really big thing as I was growing up. And so the problems that you can solve with technology are very large, they're very global scale businesses. And so I developed like an interest at a very early age around like business and building businesses, but also coding. I studied computing at school and then went on to study that later at college. But really, I couldn't wait to leave education. I could not wait to get out of the education system. For me, it was too restrictive. I wanted to get out there and try and build a business. And I tried a few times. I tried to build different things in my sort of late teens, early 20s. But what I found was actually you need a lot of experience. And because there are so many different scenarios that you have to uncover through experience, essentially to make you successful. So I moved into software engineering as a career. I spent a lot of time early on contracting, mainly in the payment space and e-commerce space. I spent 4 years after that leading a team at British Telecom, building out their retail payments solution and e-commerce solution there. After that, I moved to Apple. Wasn't working on payments there, but worked on a number of different applications, building essentially early stage proof of concepts, taking those into enterprise grade products. And then after that, this is around 2016, 17, started to learn a lot about blockchain. And for me, that was a bit of a light bulb moment. It was like, this is really groundbreaking technology that has the ability to sort of transform, large industries. It wasn't entirely evident at that point in time for me what industries they were, but I started playing around with blockchain technology, learning more and more about it, sending, receiving transfers, transactions. And it was instantly obvious like how powerful the technology was. And through that research, I learned about a company called Ripple. Could really relate to what they were doing in the payment space. I'd sent cross-border payments in my life. I traveled years and years ago, sent lots of cross-border payments, lots of friction involved in cross-border payments today. And Ripple sort of came along and said, hey, we've got this cool distributed ledger technology or blockchain technology, and we think we can use it for cross-border payments. So I joined them in 2017 because it was really the first use case of blockchain technology that really resonated with me. And over the course of the next 5 years, I worked with Ripple to build out their payments network, ODL, on-demand liquidity, and a whole bunch of other products. And really, I think I'd learned a lot in my career up until that point. But Ripple was like the sort of the company that made me see things in a very different way. Taught me a lot about how you build a product. Taught me a lot about how you build a business, because I joined the company relatively early. And, it highlighted a lot of problems within the payment space, but also in the blockchain industry as well. And that was, partly the motivation for then obviously moving on and founding Palisade. But it was in 2018 at Ripple that I actually met Manthan, and we spent 3 years working together as engineers.
Your background, Manthan?
Oh, yes. I have a similar background to Tom. Been in technology since I actually wrote my first line of code when I was 8 years old, and self-taught C++ because I was trying to build a invoice system for my dad because he had a business, and I think he was basically trying to use a system that he can customize to his own needs, and he can sort of use it to issue invoices and in print, which he can then effectively post to people. So I built that system because it was just quite an interesting problem, and since then I've just fell in love with technology, loved solving problems using technology, software, very curious about sort of how the hardware works, how if actually technology can solve problems. And I just knew at that point that this is what I wanted to do, and I wanted to solve problems in this way. I also come from a business background, as in my family has had a 60-year-old business that they've been running through 2 generations now. So always wanted to do something like that, to be able to bring people together to solve a problem and to effectively lead a business. But I always knew it was going to be something in software. And I think what was more interesting was how, in contrast to, I guess, anything else that I've seen, with technology, you can make a massive impact. You can write a piece of software that can impact millions of people at once, and there's nothing like it. And what's quite interesting, or what was quite interesting to me at the time, was that you can build new technology. The barriers of entry is quite low, but once you are going to build something that is production ready, you need to have a lot of understanding of the space. You need to learn how the space operates and do a lot of research. So with this kind of goal in mind, I started my career working at IBM because I really wanted to understand how product works at an enterprise level. And there I was working on the IBM Integration Bus, which is a enterprise system which every large company uses to more or less degree, and it's critical to a lot of the mission critical systems that are out there today. And just getting that insight early on in the career led me to understand a lot about how mechanically things work, but also how you build a product like that spans so many sort of geographical locations, have a massive team, and sort of how do you manage a product at that level. I did my bachelor's in software engineering, and then I joined Capital One, which is one of the payment/card companies in the UK. Got a lot of insight into how banks operate, or how financial institutions in the UK operate, how you interact with the regulator, how you get certified, how you build something that is safeguarding people's funds from attackers and hackers, and learn a lot about cybersecurity. Because around this time that I got introduced to crypto, it was through Ethereum, which I think for most people in this space is through Bitcoin. But I started with Ethereum mainly because Ethereum was something that you can use to build with. Because with Bitcoin, you can hold value, you can transfer value, but with Ethereum, you can actually build smart contracts. And I remember in 2015, I was reading about this, and it was kind of super interesting. I was like, well, it was quite mind-blowing that you can have a decentralized system that can allow you to build things on top of, which enables full transparency, auditability. And it was something that I had to look into. And I found XRP around this time, and I was like, I have to get into this to understand deeper about how the technology works and to learn more. So I joined Ripple because they were the only company that were building something that I could relate to in the real world. They were building a replacement for Swift. And I've experienced pains with cross-border payments because I was based in India. I was based in UK. My parents were in India. They would transfer me some money, and it would take days to arrive. And when I was talking to Ripple, they were building something, or they were going to build something which would change that. And that was super appealing. So I joined them. I built their RippleNet protocol, which is a protocol which allows banks to talk to each other without needing a central party. So it's basically applying blockchain without calling it a blockchain and without having a sort of any of the public aspects of the blockchain. And that was quite interesting to develop because it needed a fundamental rethought of how things work in the traditional space and applying blockchain concepts to it. And then after that, I worked on the on-demand liquidity platform, which is now called ODL, which now it transfers like $1 billion worth of assets every week, I think. But when we launched for the first time, we had a massive celebration when we transferred $1 from US to Mexico. So super interesting. That was the moment when I could really see that, okay, blockchain is insane, and you can use blockchain in so many different ways, and you can actually apply it. And here's a proof of how it actually works in real world. And this is around the time when I met Tom in 2018, and we were working on a few ideas. And after that, I left Ripple to join Ava Labs, primarily to validate some of those ideas, to actually see whether those problems existed on both sides of the fence or not. But at Ava Labs, I led their core development team working on the core protocol of the Avalanche blockchain, which effectively enables instant settlement across the blockchain. And that's where I was also working on the Core ETH, which is a fork of the Ethereum blockchain.
It's quite impressive of your journey through technology and how we went through some of the biggest top tech companies in the world and to create your own venture. So before you go to your venture, I would like to touch, so you mentioned, both of you, that you were disrupted by blockchain. So you're already in big companies, well, the biggest in the world, let's put it that way, from Apple to IBM, there's nothing bigger. So what the thing, you touch a bit, both of you, that you wanted to come into payments and into this, but of course blockchain is quite disruptive, and especially at the time we joined, probably blockchain was still not the mainstream it is now. And there was a lot of considerations and probably a lot of risks as well. So tell us a bit about your experience with the integration of blockchain, and as well why Ripple and not other of the major blockchain protocols.
I think the why Ripple question is very easy, at least for me. I think I speak for both of us on this. Yeah, it's really that, we've got this new technology, which was blockchain, and Bitcoin at the time was kind of like the poster child for blockchain. I'd sent Bitcoin transactions. I got a good feel for it, but I'd also sent XRP transactions. And I think the thing that really stood out to me was I didn't have to wait. it was like with the counterparty or at the destination within 3 seconds. And I could send any amount for a fraction of a penny. And once I learned what Ripple were doing, it was just straight away, it just resonated. It was like, this is an absolute game changer. I think at that point in time, back in 2017, they hadn't actually started using XRP and payment flows, but it was on the roadmap. There were some great ideas around it. So there was a really solid use case there. It was transformative. It was global on scale, and it made billion. It has the potential to make billions of lives around the world better in many ways. And so the use case was clear. It was a big problem. But I think also when I sort of analyzed who was in the company, who was building the company, the founders behind it, and the executive team, it was very, very clear at that point in time that there were no other companies like that in blockchain. There was the Ethereum Foundation, and there were other small startups, but really no company that had that level of talent in it, in my opinion. And I would also say that had that sort of seriousness to it. They're changing banking, essentially. They're changing payments networks, and you need mature, experienced people to do that. And so, if I'm going to dedicate my time to something, I want to make sure that I'm doing it with the right people. And I think, that was one of the other traits that Ripple had.
I think one thing I would say on this is the biggest thing that's going for XRP Ledger is that unlike something like Ethereum, where it's more like an Android experience in the sense that you have to sort of do a lot of things yourself, and you have to it's highly customizable. You can customize it to your wit's end. But for XRP Ledger, it's more of an Apple experience in the sense that if you want to mint a token, there's a way that's being really well thought out over a long time by very highly qualified engineers, and there's a way to do that. So you don't have to think about, if you want to create a token, you don't have to think about smart contract and all the ways it can be attacked. And that thinking, or the responsibility of thinking, is not on you, it's on the blockchain. And the blockchain does that for you. And what it gives you ultimately is a product that is quite easy to use, where you can issue a token in under a second, and you don't have to think about all the things that you might think about in the Ethereum land, and it sort of just works, to quote Apple. The cons to that obviously are that it's a little you don't have as much freedom on sort of Ethereum as you do on XRP Ledger. But the idea behind that is that 99% of the use cases will need this. So, and that works. And you can do that 1,000 times, 1,000,000 times, and it will continue to work. So that's why XRP Ledger is so appealing, because when I talk to customers or I talk to prospects, they just want something that just works. They don't care about all the standards or all the technicalities of sort of how things operate underneath the scenes, how the cryptography works. No, what they care about is, I want to do this. Does this thing allow me to do that? And for XRP Ledger, 9 times out of 10, it's yes.
In fact, just for people listening to us, probably the ones there, I think everyone knows about Ripple and as well its token, XRP. XRP is with the market cap as we speak in July 2024, $34 billion plus, and as well one of the top tokens in the world. But as well, like you said, it was created by, I would say, probably one of the first tokens that was created in a way that was with industry experts, with a substantial investment, a bit of a bridge between a Silicon Valley, not a bridge, a Silicon Valley backup of funding, and with international teams, like you guys said. So yeah, I'm quite cautious. I know it quite well. So on the top of that, so let's go right now to your venture. So from your experience on major global brands to working with Ripple or finding blockchain in Ripple, you guys decided to create Palisade. So tell us what is Palisade, and as well the focus on, like you said, is the secure foundation for your digital assets.
Yeah, I think if I had to describe Palisade in a single sentence, it would be that it's a 360 shape-shifting custody platform that focuses on delivering solutions to real use cases. What I mean by that is, if you look at the space today, there are a lot of custodians that are out there that are solving the technology problem, and they're selling technology, like something like MPC wallets or HSM wallets. But with Palisade, we let that thinking around key management and sort of solution and the cryptography, we push it down the stack, and we say, okay, a client needs a wallet. By default, that wallet has to be secure, and it has to be using the best standards of security, compliance, and the actual granularity of the technology is really up to us or to work with the client to define. But the client should get a secure wallet infrastructure that works for them, works for their use case, is legal, is compliant, and that's it. So Palisade is this platform where we have these composable units of technology, ranging from key management to a sort of like governance, policy engine, counterparty management, all the way to how we integrate blockchains. And we deliver this platform to clients in a way that they can use different aspects of the platform. They can combine them to solve a problem that they have. So to give you an example, Palisade today integrates a regulated custody. So we're regulated in France. So there's a regulated aspect to it. We also have a wallet as a service product, which allows our clients to take custody of the funds themselves. But it's flexible in a way that they can also share custody with their other partners or their counterparties as well. And then we have, on the other end of the spectrum, we have passkey wallets. So it's a product which effectively enables our clients to onboard their clients in a very easy manner. So, and the reason why we do it in this way is that when we have someone coming up to us and say, I want to issue a real world asset, I want to issue real estate on the blockchain, we can offer our platform and they can combine different aspects, including the regulated treasury management, key wallets, to make sure that their customers are able to onboard to their clients easily using fingerprint or Touch ID, and that they're able to effectively use Palisade as a Web3 backbone to their entire solution. So from a use case perspective, we're not selling our clients a piece of technology, or we're not selling them a specific implementation. We're selling them a complete solution, which is the Palisade platform.
Yeah. I might just tack on to that. I think we think about not who we are, but what we do for people. Really, like at really high level, is we're a digital asset wallet and custody company that makes it easy for businesses to operate in Web3. And when we think about what that means, it can mean a few different things. But to operate in Web3 at the lowest level, you need a wallet, or you need secure custody of your assets. And so we've built out this incredible technology over the last 2 years, which provides either regulated wallets or wallets as a service, like Manthan was saying, to businesses of all types to operate, compliantly, securely in Web3.
So let's start by one part that I think is important, and of course it's fantastic the work you did, and of course the regulation part as well. I'm sure it is not an easy task. Well, let's start by, and I think this is particularly important because people listening to us, of course, everyone knows about crypto and the basics of blockchain. Especially my audience is quite blockchain, being me, very passionate about blockchain. But there's still a lot of, I would say, questions and considerations, and I would say indecision about digital assets. So if you guys could explain digital assets, and I know that we can go very technical very easily, but I would like to, for people listening to us, to have from your own experience describe, and I'm sure that probably each person you are talking about your product, you have to explain in different ways. So just to understand how you see the digital assets in one end, and then the digital assets custody. That I think the two things are particularly important to framework before you go deep dive in your platform.
Sure. Yeah. I think, the term digital assets, it covers a really, really broad range of different asset types. And we, you hear the term digital assets in conversation, it can really mean a number of different things. And some of those include like non-fungible tokens, utility tokens. It could be, today the hot topic is tokenized real world assets, or it could be currencies and stable coins and things like that. So the term encapsulates, all of those and more. Over the past 10 years, we've seen the term, cryptocurrency being used predominantly in the early days, and now we have this broader definition of digital assets. And I think that's come about because over time we've seen new use cases emerge. So NFTs, haven't been around for all that long. They've been around for 5 years or something. Currencies and stable coins, becoming more and more important now, and different types of stable coins exist. I think the thing that's, everyone's talking about these days is real world assets and tokenized real world assets. And that again is a super broad term, because that can mean a whole bunch of different things. from tokenized commodities to tokenized real estate. And so it's super broad definition. And, I think over time that definition will probably change again and encompass even more types of assets.
I think digital assets are assets that are issued on a ledger. So if you look at we can get into the technicalities of this, but it's quite broad. And as Tom mentioned, it ranges from, something as simple as a token all the way to something as complex as a stable coin or even a real world asset. What it is not is it's not the physical asset itself. It's in all the use cases that we see, it is either the digital only asset. So it is only digital. It doesn't exist in the real world. So something like an NFT, for example, if you look at any of the punk NFTs, they are the digital version itself, and they're digital only. Or you have digital assets that are pegged to real world assets, so like a stable coin. And in all of these assets, the actual definition depends on what is either pegged to or what the use case is. So if you have an asset, for example, that gives you access to a house or a portion of a house, in the sense that you have equity and the asset represents certain percentage of the equity of the house, then that could be classed as a security, and it likely is a security. And then, or if you have an asset that is pegged to a dollar or to a fiat currency, then it's sort of classed as a stable coin, because it's kind of what the current definition is. From a custody standpoint, there are a lot of different terms in the space that are being thrown around. So it goes from non-custodial, where there is no custody of the asset, or the custody of the asset is not with a custodian. In the sense that if you're the asset holder, you have the custody yourself for your own assets, to shared custodial, where you are able to share the custody of your assets with someone else, or you have a bunch of partners and you all share custody of a single pool of assets, to custodial, which is where you are able to sort of delegate custody to a third-party custodian or someone like that. A normal person in Web3 will typically interact with all three models in one way or another. So you may be sort of holding custody of some assets yourself because you have a wallet. You might be talking to an exchange, or you might have funds on an exchange which may be using a shared custodial model, or you might be buying or selling assets on a swap or somewhere which at some point is being interacted with a custodian somewhere. So it ranges quite a lot. I think the key or the interesting thing about this is that the definition has been changing over time. So we've been seeing that the custody has come into question a few times, and I think there's a real push to making sure that people that are, or the custody of the self-custody of assets remains sort of outside of regulation, or it remains neutral. But what is increasingly happening is that businesses that are operating in this space are demanding more and more clearer definition from the regulators around what is custody and like what do we call this that we have. To give an example, we had a client that we were working with, and they were trying to issue loyalty points on chain, and before those loyalty points are actually redeemed by a client, technically, would you say that those loyalty points are in your custody, or would you say that those loyalty points belong to the client? Now, that's really the kind of questions that we kind of deal with at Palisade when we work with clients to effectively help them navigate this sector, because there's not only a lack of clear regulatory clarity on a lot of these things, as in there is no legal book that says if blah blah blah, then blah blah blah, but also at the same time, because use cases are emerging day by day, things are also constantly changing. So what you may view in context one day will be viewed very differently in another day.
Yeah.
So, any notes more?
Yeah, I might just add one more thing there. I think, digital assets is extremely broad definition. It means, many different things and can be applied to many different token types. I think, just to tap onto what Dan was saying there, I think what that really means for custody providers and wallet providers is that each different asset type has its own regulatory obligations. And, as a custody provider, we have to either ensure that we're within regulation when we're holding and interacting with these assets on behalf of clients, or that we're not holding them if we don't have the relevant licenses. And that's definitely a challenge. And I think as time goes on, like Manthan was saying, there's going to be more clarity. There's going to be, a super firm framework, which we can maybe talk about a bit later, that Mega brings. And these different digital asset types will, we'll either be able to hold them or we won't, depending on the licenses we hold.
So both of you have a fantastic background in e-commerce and payments. And like you mentioned before, your focus is as well to innovate the industry and integrate digital custody to transform this industry. So for people listening to us, they're not so technical, even if they probably are buying tokens. I'm sure everyone in my audience at a certain point bought some token. But how can this, because there's a big of a paradox, you guys touched that, there's the SWIFT systems that are as well getting somehow into blockchain after a lot of discussions. And Ripple in one end is probably the one that has been pushing the boundaries to go in mainstream payments and really pushing the boundaries forward. But as well, there's still a lot of breaking parts. For instance, there's the border, for instance, if I send money from the UK to France, and you guys have license in France, or if I want to pay, even for instance, the paradox, if I want to use my bank to pay salaries in Vietnam where I have a team, is always a nightmare. And ironically, I have to use a fintech innovation company to do that. But if I want to have my money to invest in different things, there's different parts. Or if I want the digital transform or create a digital assets of a property, we still have a lot of work to do, let's put it that way. So especially in the case of e-commerce and payments, tell us a bit how you try to use Palisade and the work that your background can be used for solving some of these parts in terms of custody and tokenization wallet tools, because I think it's quite important, but we need to take it mainstream to make it easy for everyone.
Yeah. I think if you're in the payment space, you've got three problems typically if you want to work with crypto or you're thinking about crypto. Tech is one, compliance is another, and then third is trying to find an applicable use case. I think when I was working at Ripple, there was a very clear use case around on-demand liquidity, and the actual solution was very well executed. The on-demand liquidity allows you to, for example, if you want to move money from UK to Mexico, it allows you to move money in under 3 seconds. It's insanely fast for a fraction of a cost of what it would cost you to use local rails, and highly compliant because everything is traceable end to end. For those challenges that you might have, tech is quite a big one, because if you are interacting anywhere in your flow with crypto assets, you need to handle wallet somewhere. So you need a private key or some technology that allows you to use that and to either interact with the blockchain or to use assets or to use blockchain for either accounting ledger system, or to use blockchain to talk to your counterparties or to interact with other counterparties, or to be able to deploy something like a smart contract that does very complex operations, right? So tech is quite a big challenge. Compliance is another, because what we just talked about earlier, what is a digital asset? If I create a token for my own bookkeeping, is that a security? Can I do that? Where do I go if the regulation changes tomorrow? How do I custody these assets? If I have these assets on the blockchain today in my wallet and I want to make sure that my clients get access to it, or I want to distribute some to my clients, how do I do that? So there's a lot of compliance uncertainty, and that's a huge problem. And the third is trying to build something meaningful is quite a big challenge on its own, because it depends on how you mean to do that. If you are, for example, as we mentioned earlier, there are companies that I know that are using crypto to broaden the space where you can send payments, where you can pay employees in crypto, you can pay other people in stablecoin across the world. There are off-ramp platforms where if you're receiving salary in a stablecoin, you can use off-ramp to get paid in your local bank account. So in the case that you mentioned earlier, for an employee that's in Vietnam, they can receive USDC, or they can receive some stablecoin, and they can off-ramp locally into their own local account. I think from that perspective, from those three problems, tech, compliance, and finding something to build, Palisade addresses two of them. So we solve the tech problem, because you can rely on Palisade's SOC 2 compliant wallet infrastructure to handle your assets securely. We also use HSMs that are FIPS certified, which allow you to sort of hold assets on our custodial platform. Compliance is handled because in everything we do, we have a compliance first approach. We make sure that you are protected from money laundering. We make sure that you're protected from any kind of terrorist financing risk. And overall, we ensure that whatever you're doing, we're working with you step by step to make sure that those use cases are compliant and you have the right level of support that you need. By solving these two problems, the only thing you have to do as a payments platform is to build something meaningful. It's really on custodians in the space to do this, because as a custodian, you not only have the technology, but you also have the compliance might that you can apply to help clients. And as a business, it's important to ask these questions early on, because the later you leave it, the more of a risk you're exposed to, and the more you're endangering your client as well by exposing them to these risks too. So that's kind of the entire spectrum of this.
Yeah, I think some of the existing problems with e-commerce and payments are the number of intermediaries. So if we look at why payments are slow, why they're expensive, they're slow on the Swift network because the Swift network was built in the 70s. It uses batch transactions. It sends out those transactions at the end of the day. Takes weeks. There's no transparency. The other reason why these networks, existing networks and infrastructure are inefficient is the number of intermediaries. You can have in e-commerce and retail payments up to 6 different intermediaries, for example, or I should say 6 counterparties in the flow. Each of those is taking a fee. Each of those is performing a critical job, you could say, but essentially it slows everything down and makes everything more expensive. We could completely overhaul that. I think fast forward 20, 30, 40 years from now, the vision is that we're all spending stable coins or cryptocurrencies in store for retail payments. In that world where we've been able to move away from traditional fiat currencies, we've brought everything on chain, we'd see really great interoperability between chains, so you can move assets across chains. And we can spend these assets in store. That means we can remove, a large number of these counterparties or intermediaries. We can bring the prices down, and we can also speed things up. Where custody plays a role in that is that it provides the wallets for things like the merchant bank, for example. So merchants could in the future have accounts with Palisade where they operate out of. And that's the same for cross-border payments. I think we're seeing some companies today already experimenting with cross-border payments and stable coins. And those companies are using digital wallets and custodians to provide their services out.
And so from the different parts, so you touched regulation, you touched the capacity and the fast part of this. So how are you trying to do? So at the moment, we have as well quite a lot of innovation, especially when it comes to DeFi, when it comes to CeFi as well. But the challenges, and for people, I think everyone in the audience knows decentralized finance, but you are as well going through the bridges of going to regulated finance. So especially how are you trying to scale your business? And I think probably a couple of case studies. You touch, Manthan, 1 or 2 case studies, but at least from clients, but a bit more like an onboarding and how we could use Palisade. Because my point here in this series is always go from the theory to the practice, but as well get a bit of a foundation about how this can change. Because at the moment, we have over, I think I recently checked, there's 2.1 or 2.4 million tokens. And probably 99% are zombies. And you guys are definitely working in making blockchain real case studies, not just another zombie case study. But there's a lot of challenge. And of course, there's all your relationship with the DeFi world, with the regulated world. And if you can get a bit of context about these different bridges that you're touching.
Yeah, I can start on this. So DeFi is quite complex to what the TradFi world is, or what is the normal finance world, in the sense that DeFi is this very complex intersection between technology and finance. Not like fintech. It's like it's fintech but on steroids. What is really good about DeFi is it enables you to move money at the speed of light, not only in one direction, but you can route money from one asset to another asset, or you can bounce on 10 different assets. It makes the finance really accessible in the sense that an individual can do things like being able to provide liquidity on a decentralized exchange, which you cannot do in the real world. If tomorrow if I had, let's say, 1,000 NVIDIA shares, and I wanted to use that as a way to make money off of NASDAQ by being able to put those up into NASDAQ as a way to make some money, it's not possible. It's not only out of reach, but it's incredibly difficult because NASDAQ operates as a centralized exchange. It's the same case as any other exchange. Even in crypto, if you look at Coinbase or even Kraken, they're all centralized exchanges. They have their own market makers and people that make this available. DeFi enables democratized access to finance and is a really good way to solve that problem. Also, with the transparency of blockchain and auditability and finality, it means that anything that's executed on the blockchain is instantly available and visible to not only parties, but also regulators. What's actually quite interesting about this is that you've got this layer, which is enabling lightning speed movement of money from A to B through lots of different asset types or across different asset types. This highly composable layer that you can build on top of by doing things like being able to issue an asset or being able to lend a asset that you have or being able to redeem something using an asset. So what we're doing at Palisade is we're saying, okay, this is really cool. How do we open this up to the rest of the world in a way that is secure, compliant, and safeguards customer funds through all angles, not only just technology angle, but also the money laundering risk. And with Palisade, we have a few stories like this. One of the ones is around being able to issue carbon credits on the platform, where our customers can issue credits that are sort of verified in the real world. Those credits are instantly tradable. So investors can effectively buy those credits on chain or directly through the platform, not our platform, but our client's platform. And those credits are issued on chain. So they can be traced at any time from source all the way to a trade or a lending or some kind of lock-in that the investor does. Anything and everything that happens on chain is traceable. That using Palisade, what it means is that they are getting the technology stack right, where their assets are secure, and they're also doing this in a manner that is compliant with the regulations.
Yeah, go ahead, because that's the carbon credits. But go ahead first, Tom. But I'll come back to carbon credits. I'm particularly interested in that.
Sure. I think one of the most exciting use cases for me at the moment is we're working with a company. They're based in the Balkans, and in the jurisdiction that they're operating out of, there really aren't many investment opportunities, like real proper investment opportunities. And what RWAs do, or the tokenization of real world assets, is it enables them to bring a new investment opportunity to the citizens of that jurisdiction. And they're doing that by tokenizing investment opportunities in luxury real estate developments. And so now all of a sudden you have the citizens of that jurisdiction, and they can invest in the improvement and the development of their own nation. Before that, they didn't really have anything to invest in. There's no stock exchange in this nation, and now what they can do is start to invest in the development of the area they live in. That for me is extremely transformative, and I think very, very exciting. And the way Palisade helps there is by providing tokenization capabilities that are built on top of secure regulated custody. And so they're building their business essentially on top of this highly regulated, secure infrastructure.
And this is actually the most important thing. I think you're touching right now, I think, the golden mine, because I think this is the difficulty as well of making a lot of business around the world having, first of all, there's a challenge of digitizing the assets, but as well moving it to a proper commercial expansion, and you need a marketplace for that. So I want to get back, so Manthan, I want to talk again about the carbon credits, because it's an area that I actually did a massive research myself, and the conclusion I got was that it's still a no man's land, and there's very few places where you actually can get something safely. And for instance, I've been working in 2 major projects, actually 3. One of them a European co-investor, at least put sweat equity to be involved. And the challenge is really tricky. I mean, we have COP29 coming in Azerbaijan shortly. But tell us a bit more on that case. Let's look at the case. So I'll give you a real example, because it can be a potential client as well for you guys. So I'm a forest manager in Brazil, and I have this percentage of carbon credits that I have available. And of course, my challenge is sell it to the right audience and get the money that it's coming from that. So how can you actually create something that can actually empower this business around the world? Because I've been asked from Brazil to Latin America in general to Africa. And this is a big demand because in the end of the day, there's two parts. There's the companies buying carbon credits and the companies selling the carbon credits. And then, of course, there's all the diligence you need to make. And then there's the way you buy it or you sell it. So any notes that you can go on this, because this is a multi-billion-dollar business, not to say trillion. And I think a lot of people are struggling to this, to say less.
Yeah, the blockchain is actually very good for this because one of the biggest innovations on blockchain was that it prevents double spend, right? So if you issue something on chain that is verifiable, it's there, it's immutable, and it cannot be changed. What this customer is doing with this is that there are specific projects that come on and they are minting carbon credits using proof of decarbonization. So they prove that they've sequestered a certain amount of carbon, or they have a sort of absorbed carbon from the air, or there's a specific carbon removal that has happened. And that proof is effectively used as a NFT, which is used to effectively as a ticket to mint a certain amount of tokens or a certain amount of carbon credits. With DeFi, what I was talking about earlier was that DeFi kind of supercharges that, because once you have tokens that have value, DeFi kind of brings that access to broader audience. So it brings access to broader DeFi financial system where as long as that token is compliant or is compatible and is interoperable, or it is based on some kind of interoperable standard, you can effectively make that instantly tradable, and you can bring liquidity to that specific token. And liquidity basically means accessibility, because once you have liquidity behind carbon credits, and it can be tradable, it means that the person that has emitted those or that has created those carbon credits can then be rewarded based on that. So what it means for those eco projects is ultimately that they are able to create these tokens that then have liquidity, or there's a liquidity behind these tokens. And then the investors that are on the other side can then use that to buy and sell those carbon credits. There's also a aspect to this platform which is around a decarbonization certificate. So you can use carbon credits to get a proof, which is an NFT, which effectively locks in the credits. And then you can use that as a way to actually get a certificate that says that you have decarbonized, or this certificate represents a certain amount of carbon that was removed from the atmosphere. So if we kind of zoom out of that use case and we kind of look at that space and how digital assets can disrupt the carbon credit space, is that it really just makes everything more accessible, in the sense that you can give power to the farmers or to the people that are working on the ground to be able to create these carbon credits as a way to sustain themselves. These carbon credits, if they're issued on the right platform, or there's a sort of a standard, or as long as they're verifiable, they can have liquidity associated to them on chain, which can obviously then go off chain as well. And then ultimately, those people who are actually at the root of this, who are solving that problem, can then be rewarded by being able to sell those carbon credits in the open market, getting the best price, by not having tons of intermediaries in the middle, because they can directly go to the DEX or to a DAO and then sort of sell those credits directly, and not having to talk to their agent, who talks to their agent, who talks to their agent, where everyone's taking a cut. So this is all about accessibility and about making sure that there's a shortest path between seller and the buyer.
Yeah, and I think it's worth pointing out that neither us before this and even now, we're not experts in carbon markets and carbon credits, but we, working very closely with this specific client, have learned, there's been a lot of issues in the carbon markets, and like one of them is like lack of a standard. So each jurisdiction has different rules and regulations around it, but then also, the ability to prevent fraud and manipulation. I think there's definitely been problems there, and blockchain has the ability, if smart enough people, put their minds to it, to solve both of those problems. Blockchain by default, as Manthan was saying earlier, provides you with really great transparency and auditability. All I need is a wallet address, and I can go and look, every transaction that's happened. That makes it a bit more difficult to manipulate and misreport. And then I think the problem around standard and fragmentation can be solved through contract standards. We can build a standard or a token standard or a protocol around this to ensure that everyone across the globe is, adhering to this specific framework. I think it's not quite as simple as building a technical solution and everyone just sticks to it. I know, but I think there is definitely the transformative effect that blockchain can have here across those problems.
So I know that we passed a bit of time, but you guys are touching a lot of important things. So I think coming back to your work, and I think of course you guys have started very recently, but you have of course you are backed by Ripple and by Portage Ventures and Fly. So what are your goals right now? Because you touch very big things, and I think what you just mentioned about, for instance, the challenge, I think, for me right now in the blockchain industry is no longer the technology, it's creating marketplaces that actually can solve problems for people and getting scale. Because if you don't get scale, we have a problem. So bear in mind that you guys have quite a lot of experience in major global corporations and experience both on technology and corporate level of management. What is your vision for Palisade? And as well, how can we actually create scale? Because the challenge is still creating scales. For instance, just the carbon credits that you mentioned, because at the moment, there's no platform in the world where actually you can, there's platforms that actually can buy carbon credits, or there's platforms that you can trade assets. But for instance, this goes from construction industry, from a lot of different areas of verticals that it can actually you can tokenize an entire building using digital twin and then use it for, instead of buying time sharing or buy a massive amount of paper, you can actually buy it online, buy it with crypto fiat. A lot of people try to do that, but no one did it. Even, for instance, one very basic stuff that for me always annoys me is I go in an airport and I go through 5 different airlines. Each of them has their own point system. I always forget all of them. I never use them. And I'm sure that they're actually making money on that to say less. So there's a lot of problems still that need solutions. I know that what you're trying to do is massive, but what would be like the shortcut things that you want to do to solve or create this kind of adoption that we need?
I think in super, super simple terms, it's to provide secure, compliant wallets and custody services to the businesses transforming industries by building on top of Web3 technology. The sort of longer term, broader vision is that we provide all of those good things, but the transformative effect that we have is that we have built over time a secure, compliant counterparty network of wallets and applications on Web3. And to sort of dig into that a little bit more, if you look at Web3 today, you have a myriad of wallet providers, none of them, doing KYC or KYB on, any of their applications or their users. We think that's not going to continue. And, our goal as a company is to provide the tools necessary for businesses to thrive within Web3. So I think the longer term vision definitely includes tooling around compliance and AML. And I think we think that, wallets is really just the beginning. And, giving a client or a business a wallet really, it gets them so far, but it doesn't really provide as much value as we think there could be by providing them with these other tools.
So building on what Tom mentioned, the vision of Palisade is and always will be to enable businesses to onboard the next billion people onto crypto. And we start with wallets. And I think because wallets are fundamental to everything you do in blockchain, it's a very commonly known problem that the wallet UX has been terrible for some time. If you go to any kind of DApp, for example, if you go to a DAO that allows you to buy carbon credits, for example, you have to bring your own wallet. I cannot see a world where everyone will have a MetaMask or a crypto wallet of some kind on their phone. Everyone will have the capacity to have their own or back up their seed phrase, and it's not scalable. There has to be a better UX around that. And with Palisade, what we do is we make it easy for businesses to build that better UX. And in this case, what it specifically means is that businesses can focus on their use case whilst not having to worry about security, compliance, all the stuff that should be a default, right? If you use a computer and you buy a MacBook, for example, or any kind of computer, the default is that computer is secure, right? You're not expecting that computer comes with malware, or you're not expecting that without you doing anything, that computer is going to get hacked, or it's going to be suddenly it's going to sort of die, right? All the aspects of reliability, security is there by default. if you go to a bank today, if you open a bank account with any of the high street banks, you walk into Lloyd's, Barclays, you assume that bank is compliant, right? There are no buildings there with names similar to Barclays where you may walk in and they may take all your money and then like run away, right? But crypto is rife with that. And that the way it is today is not only hard for people to use, but it's also not as secure. And it's very easy to steal money from lots of other people. And Palisade, with Palisade, we're solving on all of these points by giving businesses infrastructure that is by default compliant, it is by default secure, so that businesses can only focus on what they do best, which is to solve problems in their own space. For this example that we talked about with common credits, what it means is that they didn't have to worry about the underlying technology. They don't have to worry about whether is this protected from the latest cybersecurity threats. All of that is by default there on the platform. All they have to do is plug in our API, use our platform to issue wallets and to create those carbon credits and to process the proofs, create the NFTs, and everything else is taken care of. So the ultimate vision is to push wallets and all the Web3 pipes and mechanics and all of that down the stack so that people can build better products.
So on this note, and I know that we passed the time, but just 2 questions more. So of course, the technology seems like you guys did the most difficult part. Now, what's your kind of areas of go-to-market and what's the vision that you have? Because, of course, you are in the beginning and, of course, backed up by big players. But I think, like you said, what are the quick wins? Because I think we need that. And I think, for instance, you mentioned again the carbon credits, and I would say that this is a big thing because no one actually tackled that properly. There's a lot of people trying to do it, but it's just one example because I think crypto, there's a lot of players in the wallet side that you guys probably have much more competition. And as well, the idea of creating, like you said, there's the traditional finance, which you still need, but at the moment we have a lot of fragmentation. I think that's the biggest challenge. Even me, I have to use like probably different 10 wallets sometimes to do different things, which is quite annoying. And actually I forgot the passwords, and even me that I'm quite a solid player, when you do these mistakes, you can get in trouble. So a bit of that, the experience, because you guys are doing it and building it, and as well a bit on the security, because you touch security is, of course, what happened. We are in July, what happened recently with a big host. That it was traditional technology, not even crypto, where we had a huge part of the world traveling disrupted because of an update of software. It was not even a super hack, it was an update of software. But yeah, I just want to hear your thoughts on this.
Yeah, I think, wallet infrastructure and custody, we're always going to talk about that. That's our bread and butter. That's what we're doing. And so I think, that is going to continue to be important for a long, long time. Yeah, there's a number of companies building wallets and custody services. Palisade is one of those, and we have our own unique way of building out those solutions and our own unique perspective on how that should be done. I don't think the importance of wallets and custody is going to go away. I think what will happen though is we'll over time stop talking about the technology and talk more about the value, the use cases, and it from a solutions perspective. And I think we've touched on some of that today. With every use case that we've discussed today, at the bottom of that is a wallet, and a wallet is sort of the foundation for all of these use cases. So I think Palisade's, just good to go back to Palisade's vision, is like to remove and abstract away all of the security concerns that you would have with holding assets, but just made it easy to interact and build use cases on top of. Talking specifically about use cases, I think for the industry, the big win, really big win, and maybe I'm a bit biased here, is payments. I think payments unlocks millions of use cases and really brings crypto, digital assets into the mainstream. And I know now if you can go out there and Google companies building payment solutions on top of crypto, there's more and more of them. But I don't think there's enough, and I think there's still a long way to go. I think that's going to be the really big win for Web3.
I think similar to what Tom already outlined, what we're gonna see is we're gonna see Web 2.5 rather than Web 3 in practice. We'll see financial institutions using crypto on the back end rather than the front end as a way to settle payments, as a way to track IOUs. And those are, as Tom mentioned, those kind of payment-related use cases are really quick but impactful wins. I think in a lot of industries where you have lots of intermediaries, and if there's a shorter path from source to destination, and if that can be executed, blockchain is a really good tool for that. So for carbon credits, what it means is if there are a lot of intermediaries involved that are allowing you to vet the credits and sort of, or do the audits and sort of all the way up the stack, you can sort of decentralize a lot of that. So instead of saying that we need an auditor here, you could democratize that. You can say we need an auditor that meets all these standards, and if you audit this, you will get this reward, and you can turn it into a self-sustaining system. That's where you have big impact. But I think a lot of those democratizations will take time. I don't think we'll see carbon credit space completely getting decentralized anytime soon. But we'll see the case studies of the platforms that we're seeing in the space come in and sort of chip away at this larger problem. And the aha moment will come in when these people have been chipping away things in the back end, not really visible to the normal or to the public. But then when something big kind of happens, that's when you see a lot of these things come to surface, and you see, okay, that's already been taken care of by this. And removing those barriers is really primarily the goal for the blockchain and for Web3, to make things into a level playing field, make it easy to access to the wider set of audience, and to make things immutable and more auditable, more transparent. So that's primarily where I think the focus will be.
Now, it's interesting. To wrap up, just two notes, and as well, probably one final question for two questions. So first one is, one of the biggest challenge with these tools, besides the adoption that we touch, is the UI UX and the simplicity. Because what happened, the success of Apple, where in your case, Tom, you were part of that, and in your case as well, IBM, successes of IBM as 100, probably is the only organization that survived 100 years into technology world, probably IBM and Siemens. But the part of resilience is how you take a product to audiences that actually understand it, and then you create mass adoption. And part of that is UI UX and simplicity of usage. So what's your focus on that?
Yeah, that's a good question. I think that's absolutely right. I think the blockchain industry for a long time has been dominated by tech-heavy teams and individuals, and individuals that have done an amazing job of building out, the low-level networks and protocols. And, with anything, if we're going to talk about mainstream adoption, what we have to do is make it easy, make it relatable, make it understandable, digestible, make it so that it doesn't cause friction. And what that means in Web3 is great user experience, seamless UX, and clean, easy to understand user interfaces that abstract away all of those complexities. And a private key and a blockchain address is a really good example of that. For a long time, up until relatively recently, if you wanted to onboard onto a blockchain, you would get a wallet, you try and find a wallet, and then you would have to manage that private key or the mnemonic. And the mnemonic was essentially just the seed, and there's 24 random words. And so for a long time, in my first few years in blockchain, it was like, well, how do I manage this? I don't want to manage this. What am I going to do with it? Put it on a bit of paper, stick it under the bed, or whatever your method is. Already in just a few years, we started to move away from that. And, we had things like MetaMask come along, and they've made that a bit easier. And I think, progression there and the user experience around wallets is only going to improve more and more as we further abstract away, the complexities around managing private keys. But that same problem exists across, many different facets of Web3. And I think, the builders in the space now are not just focused on the low-level technical details of the protocol, but how do we make this applicable to the average person, thus making it globally adopted. And I think it's bring people in that focus on user experience and building great products.
I think it's the key. So one last thing, you are two co-CEOs. One of the things I admire that a lot. Tell us a bit, I think, for the audience around us. There's very few companies around the world that have two CEOs. I think Netflix is the biggest case study. How do you handle that, and how you work on that? And I think leadership and communication and teamwork is key. So it's great to hear that. Tell us a bit about that.
Yeah, absolutely. So, we're seeing this a bit more in Web3 actually than Web2. But sure, it's not massively common. Yeah, Manthan and I are both very technical, having been engineers for 15, 20 years. We met at Ripple back in 2018, and we worked very hard to build out, RippleNet and certain protocols and products within the company. And we actually found, working very closely together, that we brought a balance. But we both have these very complementary skills that eventually we found out would be brilliant for building a business. The other thing that we've become very good at over time is like conflict resolution. Nothing's plain sailing, especially when building a business. And we've been stress tested many times. And what it's proven is that business relationship is a lot like a marriage. And if you want that marriage to work or that business to work, you have to find a way to resolve conflicts. Best way to do that is to find a process that works for you. We were lucky enough to figure most of that out at Ripple, and then improve on that process at Palisade. I think the other like key thing to point out here as well is that what we're building is a serious product, and the consequences of getting that wrong are dire, and we both recognize that. We see companies like FTX where you've got a single point of failure, which is essentially the CEO, and if that goes wrong, it's devastating. And so we just think there's a better model, and so far it's been working out really well for us.
I think one of the things like that you hit the nail on the head is the conflict resolution is quite an important skill for a CEO to have, not only with like on the same level, but also with anyone else on the team. And I think having a single point of failure that is not used to that, or is not used to having that skill, is quite difficult for them to navigate. And I think a lot of times we've kind of seen CEOs that are blindsided by their own vision, or they're kind of trying to execute on something that they think they know everything, but they don't. The co-CEO dynamic changes that completely, because we're able to challenge each other on lots of different topics, ideas, lots of different issues that we have ongoing in the company, and being able to sort of bring that balance, as Tom mentioned, where by being able to bounce ideas, or by being able to talk about it, or by being able to discuss it, it just brings a much better outcome overall. I think there are rarely decisions that you have to make as a CEO that have to be at the right second. And if there's a lot of trust, but a lot of times any decision can use more thought, and it can use more analysis, it can use a different perspective, and that balance of trust and dependability and reliability is incredibly important, and that's what we have in Palisade.
First of all, congratulations, it's great teamwork. I wish you the best as well for all your endeavors. I will put all the links about Palisade and about your profiles. And first of all, good luck for making digital assets and blockchain mainstream, or more mainstream and more useful. And very best of good luck. Thank you so much for being here.